What's going on, everybody? This is We the People, a real estate podcast. Let's begin. How's it going, beautiful people of the Bay? This is your man, Carlos Rojas and Frank the Bank in the We the People Real Estate Podcast. Welcome. This is episode 8. Frank, congratulations. We're making it happen.
We didn't get canceled.
That's right. We're still here. We're still here. And today we got amazing content for you guys. We have how to buy a house. So if you're a first-time home buyer, this is a good episode for you to watch. We're going to kind of like go over a little bit what it takes to buy a house today in Florida's market in Tampa Bay. So be ready for that. We also are going to be going over Kevin OLEARY on CNN. Had a very, very interesting interview going over what happened with Trump and the fraud case. You know, he's being charged $344 million. Which after you set up payment, I'm hearing it could be up to $1 billion total, which is crazy. But we'll be discussing that a little bit. We'll talk loans. You know, I'll let Frank here let us know, hey, what's really going on, because he got the secrets, you know. And then we're going to be going over profit and loss loans. Frank is going to give us some ideas of what a profit and loss loan is. So let's go ahead and get started. As always, with your rates, your interest rates. Let's go ahead and take a look here.
Surprise me.
Google telling us that a 30-year fixed rate, it's at 7.9. This is up from last week.
Fake news.
Tell me, Frank. Tell me.
All right.
Tell me, because this type of stuff makes me nervous as a realtor. It makes me, you know, kind of like a little bit angry, because they promised us that the rates we're gonna go down, and now I see, you know, a third increase in our 3 shows in a row now. What's going on?
All right, here's the good and bad. You ready? The bad is the rates have gone up a little bit. Okay. The good is what we're looking at the screen right now, Mr. Google. That's fake news. Okay. The rates are not that high. I just had the rates ran. Oh boy, this is exciting, because I actually was not even ready for this part. I'm going to pull it up right now, because I had that done literally. Let's see here. Give me 10 seconds. So
now when you say you had the rates ran, that means within your system, or
So we're a wholesale mortgage brokerage business. So every morning we get the rates from Fannie Mae, FHA, Freddie Mac, VA, the same as Bank of America, Wells Fargo, and everybody.
Right.
The difference in wholesale and retail is it's just like this shirt, right? The shirt's from Nordstrom. This shirt was made in Singapore. It was marked up 5 times before it ever got tagged by Nordstrom, and they made me pay $110 freaking dollars for a dress shirt. Okay, right? Well, guess what?
It's a nice shirt.
Well, thank you.
Guess somebody in Singapore got a job.
Somebody did good. So guess what? Okay, that's called retail.
Yeah.
Okay. Had I known the dude in Singapore, that'd be like wholesale, right? Ultra wholesale. Yeah. Well, same in rates. So these rates get marked up. So the difference real quick is Bank of America and Wells Fargo, they mark them up. They send them out to their 1,800 branches.
Now, Google marks it up.
Google marks it up. What do you call it? The branch manager marks it up. Then the originator marks it up. It gets marked up a bunch of times. All right. That's the difference in wholesale and resale. So that's why you guys are going to hear me tell you a different rate. It helps you understand why I'm telling you a different rate. It's not that I'm just trying to sell you. It's that on that screen, 7.969% is called a retail interest rate. Yeah. It already has been marked up. So there's a lot of commission in there. Yeah. Let me tell you the difference. This morning, we ran the rates. Conventional was at 6.49%. Okay? That is almost a 1.5 lower than that, right? Government was VA and FHA is at 5.87%, right? So, guys, that's 2 points lower, right? I'm going to tell you that the good news is the rates are not real. The real rates are much lower, believe me or not. But what I'm going to tell you super exciting, Carlos, is in the last 2 weeks, my phone has been going off the hook. Yeah. Okay. It doesn't mean I have a crap load of deals in the process. What it means is people are active. Yeah. People are out there. So even though Google is telling us the rates are 8%, people don't care. So all the stuff we've been telling to our buyers, especially our first-time home buyers, is marry the house, date the rate. You need to get into this market now, and I'm already seeing an increase in application volume, which means you have more competition, which means the seller is less likely to cut you a deal as soon as they have 4 people asking about the house. Right now they have 1 or 2. Yeah. 2 weeks ago they had 0. Yeah. Now they got 1 or 2. Next week they're going to have 3 or 4. You better get out there. So listen to what we tell you.
I do feel like, you know, the flood is coming in terms of buyers, because now we're going into a year now almost of higher rates than, you know, prior.
Yeah, over a year. A year and 4 months, actually.
Oh, yeah.
It was October of, what are we in, 24? October of 2022 when they took a huge jump.
Right. So it didn't. People didn't just stop buying it. It kind of like slowed down,
Right.
and then then it felt like it kind of like staggered for a little bit. Now, just like you're saying that, I completely agree. There's a bunch of more buyers coming on the market. I do see that once they apply and they're choosing to buy, some of them, I'm going to say most of them, when they see the numbers, they're like, whoa, like, I understand I got pre-approved for that much. Maybe I don't want that much. So what I'm saying here is that I do, I tell this to all my buyers. Obviously, you may not be my buyer watching this program, but
You should be.
set your expectations to let's see what happens, because when you see these houses, right, and automatically you may be thinking that you want it or you want that dream, and then the numbers don't make sense. It's kind of delusional a little bit. I think that it's important that people kind of like, especially the low end buyers, because obviously if you can afford a $500,000-$600,000 home, maybe you don't care. But if it comes down to like the 300s and the 400s, which is where I'm having most of these issues,
Right.
you're not buying your dream home or your forever home. I feel like it's important that you set your goals on buying a home, on becoming a homeowner, especially if you're a first-time home buyer, and then maybe set your dreams on selling that home to get your dream home or something like that.
Yeah, it's a stepping stone.
Yeah, I'm encountering some of these buyers that get really pumped up, they get approved, and then they see the numbers and they get discouraged. And it's just, I'm trying to just tell them ahead of time, listen, this is about this much a month. And if you're buying by the monthly payment, then set your expectations on what that could be. Don't be looking at houses that are gonna be so much more expensive unless
Right.
you feel good about buying that and paying that monthly payment.
Look at it as a stepping stone, okay? If you're paying rent, you're paying a mortgage.
Right.
You're paying somebody else's mortgage,
Right.
and you're paying 100% interest. So
right.
you buy anything, you're setting yourself up for success. Even if it's at a higher rate, you buy now, you're going to get equity, because as this market gets more competitive, the prices are going to go up again. We haven't seen the end of it. And then you're going to sell, and Carlos is going to find you another house, and you're going to upgrade. I had a very close family friend tell me, my first house I bought was a condo in Carewood in 2003, right? It was great. I was 23 years old, had a condo in Carewood, thought I was doing great. Then a few years later, I bought a house on the golf course in Carewood Village, and I had a big housewarming party, and one of my family friends' parents came over, and I'll never forget Mr. Lally, Mr. Man. He literally told me, I said, Mr. Lally, this is my house, man. I'm going to have this forever. He looks at me and goes, no, you're not. And I'm like, what do you mean? I go, this is awesome. I'm living on a house in Carewood on the golf course. This is great. He goes, this is not where you stop, Frank. You are going to have bigger, nicer houses. You're going to have this and this. So he put that in my head, even though I was thinking, this is kind of where I am. So I'm going to tell everybody the same advice Mr. Lally told me. Your first house is not your last house. Your second or third is probably not your last house. But you have to get into one to build the equity to get to the next one.
I completely agree. And it's the same story for me, honestly. Now, here's the thing, guys. I also got the question a lot of... Wait, is that my phone going off? Okay.
We're live, baby.
Yeah, I keep getting the question here of how is it possible that so many people build so much equity, or how do we get into buying at the right time so that we could build that equity? Listen, the time is when you actually buy a house. You just need to get into buying. Whether it's now or later or whenever you can buy a house. Once you buy it, that's the time where you start building that equity. So from there, let's go into our next story here, which is how to buy your first house, how to buy a home. So I'm going to go ahead and get us started here. Frank has us going live.
I got us on Facebook Live, baby. Welcome to Facebook Live.
Curveball. So basically, guys, listen, buying your first house, there's a couple of things that you got to take a look at, and it's very important, right? And you got to take care of this, not just to buy houses, but as an American. You want to survive in this country, you got to take care of this stuff. One, you got to have a job, all right? You got to have a job for over 2 years, Frank. Is that correct?
No.
What?
I love it. I love it. We're doing this live, baby. We're on Facebook Live, and we're on the Real Estate Podcast.
What
We the
changed
People.
here? Because I thought it was 2 years. What's going on?
No. Okay, so Carlos said you got to have a job for 2 years. If you're doing an FHA loan, okay, then you have to have a 2-year work or school history. Okay, so if you went to school and you came out, or you're in the military and you have the same line of work, you're totally fine. But listen to this craziness. People even think that you have to have a couple pay stubs or a W-2 or whatever. If you are a salaried position, okay, not only do you not even need one pay stub, but let's say you're going from one job to the other, and you got a contract offer for a guarantee of a new job, you can close. Lincoln Lending can close your purchase loan up to 90 days before you even start your job.
Wow.
90 days. So no, you don't need 2 years history. Now, if you're self-employed, you do.
Okay.
If you're self-employed, you need 2 years history generally on self-employed, except for now we have bank statement progress.
What about hourly W-2?
Hourly W-2, you usually need 30 days.
Oh, wow.
30 days. That's it.
It used to be 2 years though, right?
It used to be 2 years.
Okay. So
We've
when did
loosened
that
the gap.
change?
Probably about 2 years ago.
Oh, wow. Okay.
Actually, a lot of things changed in COVID that got a little better. I don't know, right?
All right. Well,
2
there we
years
go,
ago.
guys. So besides that, and just okay,
I threw you off. I know I threw you off big time.
No,
on
that's
that.
good. That's good. This is good info for me. So, what about? Because I do have a client. What about if you're a resident out of the country, just got your residence card, you're good there?
Oh, I love that question. So if that person is now of legal status, they have
Right.
their green card or their visa or something like that, conventional, government, FHA, we're going to get you everything.
Okay.
Okay.
All right.
But how about the people who maybe have not reached that status? Maybe they have an ITIN number. Maybe they just started their visa stuff. Maybe honestly they haven't for whatever personal reason. There is a loan program for you as well. For a primary residence, a second home, or an investment, you do not need a visa, a green card, or citizenship to buy with Lincoln Lending Group.
That's great news. All right. So listen, guys. So again, we're giving you this info. The best way to truly find out is to give us a call, right? Find out,
Absolutely.
give us a call. Let's get the process started. A lot of people do not take this step because they're afraid. They're a little discouraged about what they think they're going to get or whatever. Forget about all that. Call the experts. Let us find out for you.
Don't
okay?
be scared. A lot of people are scared if what they tell their banker is going to hurt them. And guess what? If you go to a bank, that's true.
Yeah.
Because if you go to a bank, they can't unhear what you tell them. Right. At Lincoln Lending Group in the broker business, we are your advocate. I present it like this to people. You ready? We are your loan lawyer. The judge is the underwriter.
That's right.
So you tell your lawyer everything, right?
Yeah.
Do you have client attorney-client privilege, right?
Yeah.
You can tell us anything, the good, bad, and the ugly. We're not doing fraud.
Right.
We're just going to figure out what is the most important thing for the underwriter,
Right.
and we're going to tell them. By the way, contactfrankthebank.com. Very quick, easy website. I'll get you in front of Carlos. He's got his info. He's going to give you as well, but contactfrankthebank.com, and it's all going to be in this podcast. You can click on those links down below.
That's right.
And we'll call you back. Don't be scared, guys. We will, guess what? We don't get paid unless you close.
That's right. That's
And you don't pay us unless you close.
And that you just mentioned right now, right? We're not attorneys here, but that's great, guys. When you can actually negotiate and ask all the questions, the good, and the ugly, like you stated. When you feel that comfortable with your lender, it makes things a lot easier.
Yeah.
Believe me, I've been there. Besides that, guys, you also have your job history. Besides that, you have your income. Your income determines how much you're gonna get approved for, right? Because depending on how much you can afford, that's how much the price of the house, your buying power would be.
So literally walking into this podcast studio, I was on the phone with a guy. Thanks for listening, by the way, guys. Nick and Vince and James, you guys are all checking out the We the People podcast. Hello, this is Carlos. So walking in the door, some guy called me, great guy. Hopefully he's listening. And he literally said, hey, look, I want to move from Colorado to here. I need to know what I qualify for. He says, I'm on fixed income. I'm on Social Security. So in literally 2 minutes, I was able to tell this guy what he could do. And here's how it works. Your income, okay, your mortgage payment can only be 45% of your income on pretty much every loan program. All right. So let's say this guy made $1,000. Let's say he made $10,000 a month. Okay. That means his mortgage payment cannot exceed $4,500. So in this situation, all right, I told him in 5 minutes how much of a loan he could qualify for just by him telling me that I had an $800 truck payment and that he made so much money a month. And guess what? It wasn't enough for him. So what did I say? I said, why don't you get a cosigner? And he said, I do have a cosigner. And then we said, okay, well, you got a cosigner. Let's talk about their credit and yada, yada. And then I told him how much down payment he would need for the cosigner. So everybody has the ability to buy something. It just might not necessarily be what you want, but there's other options. The cosigner, income and employment is important, but if you have a big down payment, you don't necessarily need to show your income.
That's right.
And by the way, income is not just pay stubs, W-2s, and tax returns. Bank statements, assets, profit and loss statements. There's all kinds of things that you can do creatively to create your income. So don't be scared. Just because a bank says you can't do it does not mean Frank the Bank can't do it.
That's right. That's right.
Contact
I've seen it happen before. It's very true. Guys, and lastly, we're going to talk about credit. So credit, the credit will determine a little bit of whether you're going to get a better rate or not. Correct, Frank?
Absolutely.
And what are the numbers? Let's talk about what's the minimum, the best, you know.
So you're going to hear a whole bunch of things. If you go to a bank, the most popular number you're going to hear is 620. Okay, 620 is the minimum credit score for a Fannie Mae conventional loan. Okay, FHA, you can go down to a 500 credit score. All right, VA has no minimum credit score. That's right, you can have a 480 credit score, and we can get a loan for a veteran. All right, blows your mind. Credit score will give you two things. It will give you a lower rate, and it will give you a lower down payment in most cases. For example, you have to have a 600 credit score to get 100% FHA financing, no down payment, all right? But if you have a 580, you can just put down 3.5%.
Okay.
A lot of people don't know that. If you go under 580, you need 10%. So credit is important. But just because your credit is in trouble a little bit doesn't mean you shouldn't apply, because we can run an analyzer and we can tell you what to do. It might be as easy as paying off a credit card.
That's right.
Right?
Yeah.
It's not that big of a deal.
And for you, for those of you guys that are maybe in a lot of debt or, you know, feel like there's no plan for me or something like that, listen.
There's always a plan.
There's always a plan. Buying a house is not always right now. I can do it right now. I'm in the perfect, you know, position. Sometimes people need a few months or sometimes years to get things, you know, going the right direction. But if you don't know this information that we're giving you right now, how will you even do it? So, you know, figure out those three things. Make sure you at least have some of that. And then besides that, if you really want to know how to get into it and get started, give us a call and we'll take care of you on that.
Absolutely.
All right. Besides that, guys, after you got those three things intact, I'm going to get you to apply. Basically, if you call me, if you call him, he'll just get you to apply and then he'll refer you to me. Or if you call me, I'll refer you to Frank the Bankier. Basically, once you get the application going, we'll get you guys all checked up. You get pre-approved. We'll give you the amount that you guys are pre-approved for. Let's say in this case it's $400,000. This doesn't mean that you have to buy a house for $400,000. If you want one for $300,000, that's completely okay. It doesn't mean that you can buy two houses, you know, one for $200,000 and another one for $200,000. No, it just means that you can buy one house under $400,000. Correct, Frank?
That's it.
All right. So you choose the house. Once we look at plenty of houses. I mean, I got clients that buy the first house that they see, which it's happened like about 3 times in my lifetime, and it's incredible. But you know, the way that we did that is that we saw some other houses, and that first one was the one that clicked for them, and it makes sense. And I've had clients that I've shown houses for over a year now, and they're still looking. So it happens. It depends on the client. The point is that you're pre-approved. That means you can buy, and now you're looking. In terms of what rate you're going to lock up, I personally tell my buyers, listen, if you're not a homeowner, you're looking for your first house, like focus on what's available to you right now. What can you get right now? Because if you're constantly looking at the rate, suddenly it goes up a little bit like we saw here, and then you miss that opportunity. And then if it goes down, you're going to go right back down to where you started. At the end of the day, like Frank said on the last episode, if something happens while we're under contract, we can still bring your rate down
100%.
While we're under contract, as long as we're not, within a couple of days of closing or something like that, right?
So yeah, here's my thing. What you said is 100% accurate, Carlos. Focus on the payment, not the rate.
Right.
Okay? It doesn't matter. Yeah, the rate affects the payment. That's what everybody's saying. But listen, if you can afford $2,000 a month, you can afford $2,000 a month. Because Carlos might show you 5 different properties, and the taxes and the insurance and the flood insurance and the HOAs could be completely different.
Yeah.
So you don't want to ever be like, I can't buy because the rate is 7%, or because this house is $300,000, because a $300,000 house with an HOA and a $300,000 without flood insurance
and
is
$2,000 in CDDs.
It's going to have a $600 monthly payment difference. So it is house specific. You got to get the pre-approval and let him show you the houses.
And every house has their own numbers, guys. So yeah.
Yep.
At the end of the day, you when I see people get pre-approved, I tell them the same thing. Like, you have no idea how lucky you are that you got pre-approved. There's a lot of people out there that can't get that approval. So take advantage of it. Go ahead and buy the house that you need to buy. Like, get ahead of the game. Start building that equity right now.
Absolutely.
So besides that, we get under contract. right? We find the perfect house, we negotiate it so that you can win. We ask for closing costs, whatever it takes, so that we can get it under contract. We check out the numbers with Frank, making sure that you're gonna be happy with your monthly payment, your down payment, and all of that. And once we get under contract, we do the inspection, then we do the appraiser, which at times we get to renegotiate again. Why? Because sometimes, the roof has a little leak and I got to put a new roof on before we close because we can't get it insured. A lot of things happen during this process. Sometimes nothing happens and everything goes straight through and it's an easy close. But the point is that I will set your expectations to make sure that you understand that shit happens sometimes and that you're ready for it. The most important thing is that you don't lose your escrow money, which is the money that you deposit right away, which is part of your down payment. It's not anything extra. It's your money, and I will protect it to make sure that you don't lose it. That way you can either get the house, or if something happens, you get your money back and we can look for another one if that is the case. But point is, we get to the inspection, we get through the appraiser, and then, once the house appraises, we're done. We basically get ready to close. Frank will set up everything with the title company. We sign paperwork, and congratulations, you're a homeowner, and I will celebrate with you with a bottle of champagne if you allow me to, and give you your keys. I'll record the whole thing if you allow me to, because I love doing that stuff. Besides that, guys, it's that simple. I mean, for us, it seems simple. It may not be for you. There is a lot of things that go into it. The contract is like 12 pages long. I know a lot of buyers, first-time home buyers, get nervous about signing the contract. I tell everybody, look, that first contract means nothing in terms of you signing it. It's like throwing rocks at a window to see if you actually break it. Like, it's just to find out if they're going to accept your offer. Right. That's all it is. So don't be afraid to submit offers. As long as you like the house, that's the important thing. You like the house, you like the numbers, let's write up that contract and move forward. You don't need to be afraid. Yeah.
It's just, all it says is that you want to buy this house. You're willing to pay this price. We've already told you the mortgage payment. You're putting a couple $1,000s down saying that I'm serious. And as long as you follow the rules and you don't back out on the seller for some frivolous reason, you're not going to lose your money and you're going to close on your house. You don't have to be scared about the contract. Same with the mortgage paperwork. People, listen, your contract is how many pages? Like 10?
The contract is about 12 pages.
12 pages.
Yeah.
You know how many pages they sign for when they start a mortgage?
I don't even know.
like 80.
It looks like a book, I'll tell you
that. It's a book, right? And everbody's like, well, what is all this stuff?
It looks like a Harry Potter book.
It does. It is. So it's probably written by Fraggles too. But anyway, so the point of this is you are, as long as you follow the stuff and you're working with Carlos and our buyers don't lose their escrow deposits. They don't lose out because we're going to protect you. All right. We, as compared to bankers and other fly-by-night realtors, we are on commission. If you don't close, we don't get paid.
That's right.
So we are not going to let you lose your money. We're going to not let you not close, and we're going to follow the contract dates. You don't have to worry about the contract dates if you work with us.
That's right. So it's that simple, guys. I mean, I know it's not that simple.
It is simple. No, it is. It really is that simple. Don't say it's that simple. It's simple. It really is.
It is simple. It's simple. We'll make it simple. How about that?
Find the house you like. Make sure you have enough money to bring to closing, and you're comfortable with the payment. That's it.
All right, so next up, we got the Kevin O'Leary CNN interview here. We're going to play for you guys. Listen, I love to know what you think about our content and what we're saying. So leave us a comment. Make sure you like and subscribe. Make sure you share this channel here so that we can get more subscribers. We are growing daily, so we really do appreciate you for watching. And here we go. Let's watch this and give me your opinions here.
Well, let's bring in the chairman of OLEARY Ventures, Shark Tank Judge Kevin O'Leary. Kevin, so good to see you this evening. I mean, let me just jump right in here. Last time you and I spoke about the possibility of what the fine could be in this case, we now know what it is. It's more than $350 million. That's a huge financial hit, and I'm wondering, where is he going to get this money?
Actually, that's such a funny question. We're talking about Donald Trump here, lady. But
bro, she works for CNN.
Right.
Come on.
As we start here, judges ordered Trump to pay nearly $355 million in civil fraud trial. So Frank, can you tell me what the fraud is that they're accusing him of?
So what essentially they were saying is that Trump devalued. He told the banks that his assets, his buildings, were worth less money, and they're calling it like some sort of like tax or bank fraud in order to pay less, right? But that's not how it works. Here's the funny thing. There's no victims in this crime. Every single bank gave him the money willingly. They offered him more money, more credit lines because they profited from every single thing they did. They all got paid off. And let me tell you how it works. When the bank goes to give you a loan, guess what? They do an appraisal. And what happens, Carlos? Sometimes the appraisal comes in low.
Yeah.
And guess what? You don't get to argue with that much. The appraisal.
That's right.
Right? And the bank's going to be like, okay, sorry, it's not worth what you told me. We're not going to lend it. Or the bank themselves, like in the case of the big commercial stuff in New York City, they say, you say it's worth $200 million. We think it's worth $160 million. But what are they essentially doing? They're going to give him less money because they're saying it's worth less. So they're putting themselves in a better equity position. That's how the game works.
So if everybody got paid off and they made profit and all of this, then why are they finding him the
Politics,
300?
bro. It's 100% liberal politics. I hate to say it. There's no other way. Even Kevin O'Leary is about to say it when he goes over this
All right,
thing.
Let's play this thing.
Play his thing. Yeah.
Closer to $500 million with a 9% interest, assuming
True.
it'll take 18 to 2 years to actually settle this in an appeal, which I think it should be appealed. He'll work hard to raise it. I think he can do it. But I don't think this case is about Trump anymore at all, because you heard the governor of New York come out yesterday and say, look, everybody, don't be scared about doing business in New York, because the only people we prosecute are people like Donald Trump who don't behave well. That didn't go over very well with the investment community because we're all asking each other, who's next? This was a victimless crime. Nobody lost any money. And a judge out of nowhere put on a $355 million penalty. I mean, who's next?
That's really scary right there.
It is scary.
So
And
he said it. Like nobody made, everybody made money. Everything's good. And he still got penalized just from the judge. It doesn't make any sense. So here's what I want to say. So Kevin O'Leary here is explaining how uncomfortable it is to even think about, doing some type of business in New York right now in terms of commercial or anything like that, because you don't know who's next, what's going to happen. This is an example that could happen to any of these business owners. I'm saying leave New York and come to Florida. We'll welcome you here as long as you don't bring those values, that are happening in New York right now, because we don't want none of that. But if you're a businessman and you got business capital and there's a place for you, it's gonna be Florida. You know, I will tell you, over here we love our businessmen. We love people that give other people more jobs. We have plenty of workers that are willing to work for you guys. So come to Florida. This is the Sunshine State, the fun state, the state that allows you to own real estate that, has amazing people like Frank and myself that will help you with that. So,
We're the
get
fun
out of
sign
New
shape.
York, man. Get out of New York. It's too cold out there anyways.
Yeah, it's very good. And like Vince said on Facebook, you can't fix stupidity. And people should be scared because what they essentially said is, we don't prosecute you and go after your money unless we don't like you. Yeah. Right? It is partisan politics, guys. There was no victims in this crime. How do you take 350? Hey, by the way, here's a big question. Where's the money going?
Yeah.
Where's the $355 million going? State of New York? I mean, for what? What did he do? Who you paying back? Who's the victim that's getting the money? Sorry.
Yeah.
I could go on forever.
Let's keep going here.
Before I don't want to cut you off, but
you do.
hear about the so-called victimless crimes, but the laws on the books, falsification of business records in second degree, issuing false financial statements, insurance fraud, conspiracy, and all these different aspects of it, those are actual crimes. I take it your point is that these should not have been prosecuted?
Well, my point is there's never been a case like this in 75 years. Everything you just listed off is done by every real estate developer everywhere on earth in every city. This has never, ever been prosecuted. But here's the real point that people in New York should concern themselves with. You can put your money anywhere. I'm a real estate developer. Do you think there's a chance I would ever take a chance on New York again? New York is turning itself into a flyover state.
A flyover
I have to build
state.
data centers now. I'm not going to go to New York. New York has power. It's got fiber optics. It's got Niagara Falls. But no, we're not even thinking about it. We're going to places that have the exact same thing, where we have rational governors that have never done this to investors. This is about New York and its people. If I were in New York today and I was living there, I would ask myself, maybe we should hire better management. Why is this happening to us? Why are we becoming a flyover state? Why are investors concerned about putting their money there?
But shouldn't you ask that? Wouldn't those people also be saying, well, first of all, I do wonder how many people take issue with the idea that every investor is engaged in falsifying business records, and every investor is engaged in what has been accused of Donald Trump and the Trump organization. Because there's probably a lot who are saying to themselves, I've never falsified my business records. I know what a square foot looks like. I know what I can ask for and what I have the money to support.
I get where this lady is coming from. I get what she's trying to.
There's
to
no
do
falsification of records.
Yeah,
None.
There's that, but also like, guys, come on, like, you know how many people like when they get asked a question about how much do you make a year?
Yeah.
How many people put 10,000 over what they actually make? Maybe 20, maybe 30.
How many of you have filled out a credit card application and you put exactly what your W-2 was? No, because you want to get the credit card.
Come on, man, like it's messed up.
But he didn't even do that.
The point is, come to Florida. We got the state for you to grow your business.
We the people have the
right.
state.
That's right. Lastly, guys, we're gonna talk about profit and loss loans. This is a very specific type of loan, and I'm gonna let Frank here give you guys
All right,
the
we're gonna
details.
wrap up on profit and loss loans. Here we go, guys. So a profit and loss loan is for a self-employed individual who does not show, again, are you falsifying records? It does not show enough money, qualifying income on your tax returns. Why? Because you took write-offs. You have a good CPA. Is that illegal? Did I say what I spent my money on? So what happens is you make $200,000 a year, but your CPA writes you down to 100. You can't qualify for the $500,000 house, but you really do make $200,000 a year. So instead of giving us tax returns, you just have your CPA give us a profit and loss statement that shows your 200 grand. It's not illegal. It avoids the tax returns. You get into the house. You don't have to pay Uncle Sam. Isn't that the name of the game?
Yeah.
Listen, if they don't like that, create a flat tax. You hear that, Washington? Do a flat tax. 10% on freaking everything. Guess what? You'd make so much more money because everybody would pay the 10%. It would be even across the board. And then we wouldn't have write-offs.
That's right.
We wouldn't have everything.
Right.
How else? I would do that in a heartbeat.
Yeah.
Done.
I feel your passion.
You want? I'll take it out right now. They want 10%. I give them 10%.
Give it to me, Frank.
Right, here you go. 10%. 10%. It's like my tithes. I give my church 10%. Let me give my government 10%.
Hey, that's simple, guys. Simple. Basically, you have a way. If you want a house, you can make it happen. Frank the bank here will make it happen for you in terms of loans. I'll make it happen for you in terms of your real estate needs. Guys, this is it for today's program, episode 8. Thank you guys so much for joining. Make sure you subscribe. Make sure you share. Make sure you like. Much love from your Tampa Bay peeps. And guys, don't let yourself be fooled by this news, okay? Like, keep your head above water, Be smart.
Have a great week.
Peace out, we the people. Take care.